Okay, recording this video to close of trade Friday, 9th September 2011. First of all, we've been kind of traveling in planes the last 36 hours. Finally got here to, we're actually in a hotel room in Toulouse, about to make our final hop across to Biarritz today. Back in France, I love this country, just so good to be back. Not been trading this week, and you know what a week it's been, unbelievable. Let me get to the charts. I've lined up quite a lot of charts in this video. I apologize if the video is going to be long, but let me get into these kind of. First of all, daily chart, we're back down 1150s here. Today's activity, you can see the volume on Thursday and Friday. We had rollover Thursday into Friday, and so the volume's kind of all messed up. You need to combine the contracts for September and December in order to get a better view on Thursday's volume, which when you do that turns out to be closer to 2.1 million contracts traded on Thursday and about 3.2 million contracts on Friday. So just be aware of that on these kind of daily charts on TradeStation. And we formed this kind of consolidation pattern where you can see we had the initial sell-off from the 1300s into 1100 down here, kind of bounced backwards and forwards in this little kind of consolidation range, a little bit higher highs and higher lows in this kind of consolidation pattern here. And typically when we get kind of patterns like this, these measured moves into the consolidation pattern get replicated on the other side, and I think we have a strong possibility that we're going to break down. If you look at that from these 1300s into initial support 1100, and then taking that measured move here from this kind of 1200, 1220 type level all the way down, takes us to 1000. So just be very careful about this next move down, could well take us there. Now we got a line in the sand with kind of Wednesday, Thursday's activity. 1200 is what it is. If on Monday, Tuesday, we manage to hold here at 1100 and break back up through 1200, well, all bets are off and we're up into an uptrend. But if 1200 kind of holds and we're heading down to 1100, then we're going to 1000. So just be aware of that, and I'll just show you what's happening. All of a sudden, a lot of markets kind of coming together to show that that's a real distinct possibility. In terms of the highest time frame chart, 40,500 tip bar chart. Last video I did was on Tuesday coming into Wednesday, and we had the German Constitutional Court kind of announcement, and I was just wondering whether that was going to, well, it was going to have a significant impact on the market and just what the professionals were going to do. Turns out it was pretty kind of lame in terms of the slap over the wrist that kind of Angela Merkel got in Germany, and they're kind of okaying the EFSF kind of going forward. However, the professional used as an opportunity to kind of goose the market higher to test back up to 1200. So we were resting around here. I was thinking, pull back to end of trend move here with all these blue professional bars kind of coming in. We hadn't seen exhaustion selling on the downside. Well, what happened? Kind of they goosed the market through on that overnight, the kind of Tuesday into Wednesday morning, gapped us through this kind of pullback resistance level way back up into 1200 here. Now you can see at 1200 what they've done is extreme kind of exhaustion buying kind of signals, a whole bunch of them here, blue professional bars kind of coming at 1200, and they kind of took that opportunity, that kind of good news, to get short, and we've come all the way down. So now you can see, last time we were into kind of 1220s, 1230s kind of up here, pull back to end of trend. We had that kind of midweek single, which was great, and then we kind of sold off here, and I was saying, look, we've not seen enough kind of downside destruction, exhaustion kind of selling patterns on the way down to really put in that bottom. We need something to mirror these exhaustion buying signals kind of down here. Well, now we've had the case where we've come back up to test. We got nowhere near the 1220, 1230 kind of level. We just made it to 1200 here, where we had that exhaustion buying signals kind of coming in again. The professionals got short, bang. So again, on the downside, we need to see this kind of exhaustion selling signals to mirror that. We didn't have blue professional bars coming into this cyclical support area here. We actually had the blue professional bars afterwards kind of heading up. Now it was Friday, kind of closing out trades, all that kind of stuff kind of going on. So we start breaking down 1140s, 1130s, and we're kind of heading down to that kind of extreme selling signal on the downside. On the 13,500 tip bar chart, yes, we have put in kind of pullback to end of trend. You can see a whole bunch of blue professional bars kind of coming in during Friday's activity. However, just again the same thing, that high up at 1200, you look at all the exhaustion buying signals that were going on up here, blue professional bars kind of lining up here. On the downside here, we need to mirror that kind of extreme selling on the downside, and the last kind of volume signal we got here was actually a flush signal at this point here flushing out the last of the buyers at that point. So I still think we're going to have to see those kind of extreme selling levels kind of going forward, which means I don't think this cyclical support's going to hold. The end of trend signal is going to hold. I think we're going to continue on down. Now, let me show you again what I'm seeing on the higher time frames, why I think that's the case. So better sine wave on the daily chart. We're still in a downtrend here. This was a nice signal. Talked about, we had that midweek signal, which was kind of end of trend on the 40,500, coinciding. We had all those doji patterns, high volume churn, all that kind of stuff going on. That was a great little kind of cyclical resistance area, and we kind of sold off from there. We're a few days away from that cyclical support kind of coming in. So we're still technically in a downtrend on the daily time frames. When you look at it in terms of the trailing stop, this is on the at ES kind of contract. This is the better X trend, where I talk about exhaustion volume kind of trailing stops here. We've tried to each time these red kind of up bars, these series of first one here, second series here, third one here. We've been trying to goose the market higher, just not been able to hold. We keep on getting to this cover kind of level at the trailing stop, kind of get to the trailing stop, get rejected at that point and head on down. So we're still in the downtrend on the better X trend. Trend line now, we're in consolidation here on these daily time frames. So between this rising and falling trend lines, the three white bars here you can see are consolidation patterns, and out of consolidation patterns we get large kind of trending moves. And so what I'm concerned about is we've got this kind of consolidation pattern here, where we're going to just drop through this trend line and make a measured move all the way down to 1100. If you look at it, a whole bunch of the daily time frames on the indices themselves. So this is the Dow. So we had this sell-off here. Come back on this chart, we're on a pullback and a downtrend. You can see coming into that pullback level, amateur up bars. Then we had the last kind of testing back up over Wednesday, Thursday, kind of amateur up bars at there, kind of turning around. And we've not seen kind of bullish divergence or exhaustion or flush signals or anything like that on the daily time frame on the down. We've got to make this pullback to end of trend sequence here. And because we're so close to this kind of support level here, as soon as that gets broken, we're going to get fireworks on the downside. Russell, same deal, pull back to end of trend. Don't have the volume data. There's no volume data on the Russell index to be able to show you better momentum and the volume patterns. S&P 500, same thing. Slightly different in terms of signals here. We've had this in terms of cyclical support, cyclical resistance, but you can see amateur up bars kind of coming into that cyclical resistance here, and we've not seen bullish divergence or exhaustion or flush signals after this exhaustion kind of selling signal here. So my guess is we're going to kind of keep on going down until we find those patterns. And then same thing on Nasdaq. Nasdaq's been really interesting. So we had our exhaustion selling, bullish divergence kind of came in initially to hold, come into our pullback, all the amateur activity into that pullback level, bearish divergence. Interesting, an ST star volume pattern here. So everybody has better pro-am. Look to the notes on what an ST star. That's a really important kind of volume pattern there, kind of profit taking by professionals there at that point, into that turning point, double top almost, kind of coming into those resistance levels here. We test it and we come back up and test it, get rejected, we're coming back down. And so because we've had bullish divergence here, kind of a straight line like here, we tend to get some kind of fireworks with some kind of flush signal or something like that. And again, I think that's what we're going to get, kind of taking us down into this end of trend. So that's what the indices are showing us on all those charts. Now, this is the average trade size again with better X trend. I will be releasing that data when I get my feet under the table kind of in France, but average trade size, I haven't released this code, so apologize for that. I'm kind of showing you this and you kind of don't understand how the thing works, but the most important thing is professional and amateur bars. They're painted just like Better Pro-Am, totally different kind of code to calculate this. But the last time we came into 1220, you can see these professional blue bars coming in into the highs here, and then the next time into Tuesday, Wednesday's activity at 1200 again, professionals right at those highs, kind of taking profits and getting short. So those are really important at those kind of cyclical turning points. Now the other thing you're going to see on this chart is kind of after this high up at the 1300s, you can see all those amateur bars kind of getting wrong-footed as we came into the sell-off here, and then you're like looking at these bars thinking, my God, there's a lot of amateur activity. Well, this is what happens when we get kind of sell-offs. During this activity, the market was moving incredibly fast. The average trade size was incredibly light, just showing all the amateur activity here. And the amateurs getting effectively soaked up by the professionals here. They're kind of soaking up all of this amateur activity, where the amateurs are just seeing this thing kind of going into free fall. And you do see this kind of activity on kind of free fall patterns. So look at all these amateur bars. Last kind of time around, we kind of came into these kind of sell-offs, and so when you get these kind of sell-off moves, you do see all these amateur patterns around that. But this is the important stuff. Coming into 1220, the first cyclical turning point, or the testing back up kind of, and the second test back up, 1200. Professionals using that with the German Constitutional Court kind of activity midweek in order to get short, and that's what we're seeing kind of coming down here. Now, the only kind of fly in the ointment is volume patterns on a daily chart and the Friday's activity. This was actually a profit taking on the way down kind of pattern. So, is 1100 going to hold? That's, as I'm saying, this is the only fly in the ointment where I see a little bit of strength in terms of professional activity kind of coming in and trying to catch those lows. But as I said, I just don't think we've seen it in terms of the exhaustion patterns on downside moves. We need to see kind of people being flushed out, and we've not seen that. We've seen them holding these patterns and making some bullish divergence patterns, but not kind of flushing out. So I still think we're going to see that. Okay, now related markets. Now, everybody knows the stories on the bonds. The bonds continue to go up, and I've been talking about this, looking at the interest rates. And let me just show you these. So this is the 30-year bond contract. We're down below cyclical support. We've still got the cyclical kind of activity moving on the downside here on the daily time frames. We've still got that energy moving down. The 10-year, you can see here, we're kind of down below cyclical support. We're coming up over the next couple of days to one of these cyclical resistance points where we'll have a pullback to end of trend. So if that happens below cyclical support, that'll be a pullback to end of trend sequence. Again, the energy, so you can count it almost like from here, from this cyclical support area to this cyclical resistance area when it gets printed over the next day or two. That has been an opportunity for us to have effectively an upward trend or supporting trend in terms of interest rates. As soon as that upward energy is over and all of a sudden the cycle turns to a downward energy kind of cycle, then we'll start to see stronger moves on the downside. So I think we're going to get that kind of sell-off in the 10-year continue on down, and you can see it on the 5-year as well. So during that kind of positive energy, kind of upward energy going on, we've just rested in this band. I mean, we've started to break the lows of that band, but now we're coming up to the cyclical resistance where the energy turns to the downside, and all of a sudden we're breaking out of that consolidation zone below cyclical support here into this downtrend. And on the monthly charts, what I've been saying over the last several times I've shown these charts is we've got this since the beginning of the year, since January. We've had that cyclical resistance kind of come in, and we've still got a month or two to go before that cyclical support kind of comes in. So the energy is all on the downside in terms of rates. So that was the 30-year. This is the 10-year. Same deal kind of going on here. We've still got this kind of coming down, and here's the 5-year. A little bit more in terms of timing, in terms of kind of moving. So all of that energy is saying, look, all the interest rates are moving down, therefore the bond contract's moving up. And now not initially, I suppose the last few times I've been saying, look, I didn't think this was systemic because the currencies hadn't moved. We've been sitting on the dollar index and the euro in this really tight band between kind of 73, 76 on the dollar index, or about 140 on the euro. And therefore we'd seen the move into the bond market out of the equity market. Because the currencies had stayed where they were, it was not a systemic risk to the system. We didn't see the money moving out of the risk-on currencies into the risk-off currencies, and people were buying the bonds, the US bonds, almost as if it was a play, an asset allocation play out of equities and into bonds, because the currencies hadn't moved. Now, over the last couple of days, what we've had a huge move in the currencies, in the dollar index versus the euro, and we're starting to see it in all the risk-on and risk-off currencies. So now all of a sudden the scenario changes. Now, because we've got that move in the currencies, potentially we're talking about systemic type risk and systemic type moves in the market, which we'll see kind of the continued move strength into the dollar index and the bonds, and out of risk contracts and out of equities and so on. So, and this is where I was talking about the last video I did. We had this professional up bar on the dollar index, and I was saying, look, is this one of these type of bars where we'd had professional profit taking? As soon as we get a blue professional bar kind of coming in here, the market kind of sells off and we keep going. So the thing, or was it a jumping the creek type move, where that's the professionals getting us going through cyclical resistance that'll print at some point, getting us through this kind of 76 level, out of this consolidation zone, kind of continuing on. You can see we've had on Friday's activity another move up to 73. It's a huge move in dollar index, starting to break out of this consolidation zone, and because the lows of these bars haven't been taken out, that suggests that this is kind of getting this move going, goosing it going forward out of consolidation into a runaway move, trend move on dollar index. So that's what I'm looking for. Yes, we could easily see, and we've got a cyclical resistance kind of going to print in sometime during next week, could easily see this kind of come off a little bit, but I'll be looking for this breakout zone. If we have any kind of testing back down, do the professionals kind of pick it back up in the 76 level in order to keep it going higher? And you can start to see that on euro as well, same deal. So euro at 145, 146, we had all these amateur bars kind of at the high of the range, Rambo patterns here, no demand, Rambo patterns, no demand, couldn't get it going, and we thought with that activity on the German news out of the Constitutional Court on Tuesday, Wednesday, that we could maybe hold that level at 140. No, cyclical supports printed on dollar index, and now we've fallen through that with all these. So this is falling through the ice with these blue professional bars kind of coming in. We're down at 136s now on the euro. So all of a sudden this is like people are getting out of the euro, buying the US bonds, buying the US dollar. Equity markets could be coming off, and gold could be coming off, silver could be coming off, and so on. So let's just roll through these charts now. Copper we kind of tested back up to 420 here after this sell-off. Amateur up bars into here, bearish divergence as we kind of just test that 420 level, and we come back down, really big move to $4 on Friday, kind of breaking out here. Now we've seen a couple of bullish divergence signals on volume patterns, better momentum here, but they're really close to zero line. We need to be seeing something that kind of flushes out people, more like a flush signal, so kind of extreme selling here, and so just looking for that as we're kind of going forward. Crude, same deal. The only kind of bullish divergence signal that we had was right on the zero line. We need to be seeing a volume signal kind of in this mid-range, somewhere between exhaustion selling and these kind of bullish divergence signals right close to the zero line. So looking for some kind of move down there. We didn't. We got a little bit of a downside move on Friday. It wasn't big though. Kind of closed back up at 87. So it's almost like that profit-taking pattern on the volume charts on the E-mini. It's like that wasn't a terribly convincing down move, whereas copper was. Aussie dollar, we've had cyclical resistance. We poked on through it with amateur up bars here. Now is this blue professional bar kind of heading down to 104. Where the professionals kind of falling through the ice at this level, and we need to see those kind of bullish divergent signals to stop this move on the way down. So until we see that, this is kind of drifting down. Now silver, been talking about this, had our end of trend on the daily time frame, tested back up, bearish divergence signals, amateur up bars into almost like a double top here, coming back down. So if the move is into the dollar index, that kind of means weakness for silver and for gold. And you can see on gold here, we had our exhaustion buying, we had our bearish divergence signals. Friday's activity, kind of a little bit of a doji pattern on Friday. Not, I beg your pardon, I don't think that was a doji. Let's just bump that up. No, not doji, just closing in the middle of the range, but a profit-taking pattern. And we're starting to see a real weakness kind of rolling over in terms of better momentum here. And then lastly, now, I've not shown commitment of traders charts for a heck of a long time, mostly because I've kind of fallen out of love with commitment of traders. I don't find the signals kind of clear enough. But every week I do check my commitment of traders charts just to see what's going on, and my kind of favorite indicator is a kind of bullish bearish divergence signal on the currencies, on the different markets with the commitment of traders data. So that's what I'm going to show you. Not going to show you how it's kind of created. There's too much kind of information in order to show you how it's created. For anybody who's interested, who has better momentum, it's better momentum any, using that as that kind of bullish and bearish divergence signals that better momentum uses, but just on the commitment of traders numbers that are kind of flipped around. Anyway, let's look at this. What you need to be looking for is these kind of bullish and bearish divergence signals on the commitment of traders numbers. So commitment of traders is showing down here kind of flipped, and these bullish and bearish divergence signals are shown on the price bars themselves. So dollar index on a monthly chart, so although the commitment of traders numbers come out on a weekly basis, you can actually look at this on a monthly basis. But you can see here And the reason why, basically over the last kind of year, I've been kind of bullish on the dollar index and saying I think we have been going to hold, is because of all these bullish divergence signals that we've seen in the meantime. And so with Friday's data, we've had kind of more activity in the currencies, just showing kind of strength in dollar index kind of coming in here, bullish divergence signals here on the monthly chart and on the weekly chart here. So we had a whole series. We're coming back in, testing 76, bang, bang, bang. And if you look back in history, they're pretty useful signals here in terms of showing what's going on. So that's dollar index in terms of monthly charts. And look at this, on the other side, flip side, on the euro. So euro monthly chart here, bang, bearish divergence signals. And again, looking back over history, they've been pretty interesting kind of signals. Euro on a weekly chart, bangs just kind of come in with this kind of week's activity. Bearish divergence signal kind of come in here, and we had this kind of sell off to 136. Also, just out of interest, we also did have this in the S&Ps. The signal was late, just because of the way it's kind of calculated here. But we did get a bearish divergence signals coming into this last sell-off at 1300. And on the downside, in terms of stopping this move on the way down, we're not seeing kind of bullish divergence signals. Just as a small point there. But anyway, bearish divergence signals on the euro. British pound, these actually on the weekly chart came up at the beginning of the year, and the pound's been fairly just trading in a range, but all of a sudden we're starting to break out of that range on pound, and you can see it on the monthly chart as well. How it kind of stopped this move kind of on the way downside here, and now we've had a bearish divergence signal kind of come in here as we're starting to drop out of that range. Friday's activity, 40,500 tip bar chart, you can see coming into Thursday's activity, the sell-off that we had, end of trend, kind of marking the top up there at kind of 1200. We kind of sold off. This end of trend didn't hold. We hadn't had exhaustion selling on the downside, although we saw some bullish divergence patterns here. We hadn't seen exhaustion selling to mirror this exhaustion buying that we had coming into that end of trend move on Wednesday, Thursday. But we got it towards the end of the day. So first activity after the open on Monday, all these blue professional bars kind of come in to hold the market at this point here. But then we make this kind of complex correction pattern all the way back up to a resistance point on the 4,500 tip bar chart. We get exhaustion buying. So even with that kind of exhaustion buying, that's as good as the bulls could do, kind of getting this move back up, kind of lose confidence, bang, sell off, market sells off into exhaustion selling, kind of getting this move going, and we start to see end of trend here starts to hold down here because we had our exhaustion buying, and we got kind of bullish divergence patterns, and all these amateurs kind of coming in here, professionals kind of pick it up. Interesting kind of signal at the end of the day. Just wonder if that's kind of everybody just getting out. We'll kind of wait and see kind of Sunday night into Monday morning. But again, I've whittled on. This has been an extremely long video. Apologies for that, but it's important in terms of seeing what's going on in the related markets. Anyway, enjoy your weekend, and look forward to starting back trading Monday.